Okay. Hello again and welcome. We appreciate you taking the time out of your day to be here as we discuss finding a financial institution that aligns with your business philosophy. A very special thank you to our presenters, Cynthia Clune and Bill Midgley. My name is Ashley Arias. I am the Business Product Marketing Specialist at Hudson Valley Credit Union. A few housekeeping items to start. There will be a live Q&A held at the end of the session, but please feel free to submit your questions at any time using the Q&A feature found on your taskbar. We'll also be enabling the chat so you can network and discuss today's session with other participants. If you need to jump off or if you missed parts of this webinar, no need to worry. The on-demand recording will be available later on. Now let's meet today's presenters. Cynthia Clune is a certified business advisor at the Small Business Development Center in the Mid-Hudson region. She has over 25 years of lending experience and is well-versed in helping startups, entrepreneurs, and small business owners achieve their goals. This includes business plan preparation, projects, acquiring funding, marketing, and general business knowledge. Thank you, Cynthia, for joining us today. With a background in finance, accounting, and operations, Bill has held many executive level positions at large multinational corporations, including Sony Electronics, Osei Imagistics, and Canon Solutions America. Bill Midgley spends his retirement volunteering as the Assistant District Director for the Hudson Valley at Score Dutchess, where he offers free and confidential one-on-one business mentoring to new and small businesses. Today, they will be your guide as we take a look at the difference between banks and credit unions, the importance of separating your personal and business finances, and what you should look for as you're shopping around for a financial institution. So let's get started with the main differences between banks and credit unions. Cynthia, could you give us your perspective on the differences between the two?
Sure. With a credit union, they are member-owned. So they are a nonprofit and not looking to and they're not looking for that bottom line, that profit that banks are, because banks are generally privately owned or publicly owned. So they have to pass their profit to their stockholders and their owners. The credit union generally will do it with decreased interest rates for loans, higher rates, usually on their savings and savings items, and lower fees. So I'd say that that's probably the major difference with the two organizations, is how they function. One is a for-profit basis, and the other is a nonprofit, and basically is there to assist their members.
Bill, do you have anything you would like to add?
I think one of the other key features is their perspective on really being engaged in the community. Yes, some of these smaller regional banks do have a regional perspective, but the credit union really takes ownership in that community to help their members and to enable them to grow. So I think that's a very distinct difference as well.
Absolutely. Obviously Hudson Valley Credit Union is a credit union per our name. Very much what you said, Cynthia, we are owned by our members. So that drives the decisions that we make and the items that we put forth into the community, our products, our services, our rates, our fees. It's all dictated by our members, because our members get a vote and they get a say in how the financial institution changes in the future. I do want to also mention that the credit union is insured. All of your funds are insured by the NCUA versus the FDIC. So there is that similarity, just different organizations insuring their funds. So as a credit union, Hudson Valley Credit Union is very invested in the success of our members, employees, and community, which is why we support, volunteer, and make vital partnerships with other local organizations. Bill, can you tell us a little bit about SCORE and what SCORE does and how they can help and support the business community?
Well, that SCORE, which has been around since 1964, we're a national organization. We're a resource partner for the SBA. We have 6 chapters here in the Hudson Valley with over 150 mentors willing to serve clients looking to either start up a business. And one thing that's kind of a misnomer out there is that we only do startups. That's not true. We do like to assist companies that are in business that are looking to grow. Maybe they've hit a plateau or they've started to encounter some challenges. So we like to make sure people understand that we're there for the life of the business and not just at startup time. So it's free confidential mentoring is one of our key services. The other key service is the fact of education. And proud to state that our Hudson Valley chapters and sister chapters in the New York region, we offer 3 free webinars per month that help with the education with quite a variety of topics that are of interest to small business owners. So we like to feature that, as well as our national headquarters has a very extensive library at www.score.org of quite a number of topics, pre-recorded webinars, white papers, blogs, you name it. So really it's mentoring and education is our primary focus.
Thank you so much. And Cynthia, you are at the SBDC. Can you tell us a little bit about what they do there and what you do?
Sure. The Mid-Hudson SBDC covers Orange, Sullivan, Ulster, Dutchess, and part of Putnam. So, basically the Hudson Valley. We are, also, U.S. Small Business Administration funded plus state funded for our program, completely free to small business owners plus entrepreneurs and individuals that are looking to start businesses. We help with the, creating a business plan. We don't do it for you. We really guide you and try to prepare you so that you're learning about your business and what you should know as you go through the process. But we really do use a pretty much hands-on, assisting with you with that. The other thing is when it comes to projections and looking at whether, you can be profitable or not, I really like to work very closely with the business owner so that they understand their financials. They're not just, looking at it and blindly, saying, yeah, I can make money. That they understand what the gross profit margin is, what is going on, either with the existing business or, can they make money with what they're intending to do, right? So, so we offer that. We also offer marketing assistance. I know I've gone through several, websites, making sure everything's functional, and working for the clients. I then also have, we help them find funding sources and understand lender criteria and, why maybe they were refused or what they have to do to prepare to actually acquire the financing that they're looking for. Have definitely worked on some large projects and some small ones. And, we're there for everyone that way.
That's so great. It's so amazing for businesses to have these resources within the community and be able to turn to you guys in times of needs when they're starting or as they're growing, because as we know, business owners take on a lot and they often wear many hats, and it's hard to do it all by yourself. So having organizations like yours available is a great support and great resource. So as we look at financial institutions and as they start to dig in, what are some of the reasons that it's important to separate their personal from their business account. Cynthia, can you give us an idea of why they might want to do that?
It is extremely important. When you are trying to, on the lending side, when they are trying to look at how how the business has done, if things are intermingled, it's not that clear. It also is very important for tax time because it can cut down on the amount of time that the accountant needs to put into your, the preparation of your taxes. If everything is clearly defined and they can see, the business revenue coming in and the expenses going out, instead of it being commingled with your personal, your personal affairs. So it's definitely very important. The other thing is if you start to commingle, if you've done an LLC or you've done an S corp and you start to really commingle or take money out, not where you're paying yourself, because that's okay. If
Right.
it shows a pattern of you just paying yourself whatever you're taking out of the business to support your own personal expenses. But when you have commingled it, if you get into a situation, a liability situation, you could be putting yourself in a lot of danger because the court may look at it and say, well, you've commingled all this. So, you no longer have that protection of the LLC or the company. So it's very important to keep it separated. And it's also, I found with working with clients and also in my lending career, that it was, it can take a lot of time. Say you need a profit and loss statement that you have to give in to the lender, or, or just trying to figure out what's going on with the business when you're doing projections. It can take a lot of time to pull that apart. And it's time that you don't want to waste doing that. You're better off being proactive and keeping it out and keeping it separate.
Absolutely. Bill, anything you'd like to add there?
The only thing I would reiterate, quite frankly, is when you start to create confusion and commingle funds, you do set yourself up to being challenged from a legal perspective, whether you do in fact have a true legal entity separate from your personal assets. So you're setting yourself up for an unnecessary liability and risk. So just want to reiterate that point.
Yeah. Speaking of the risks and the legal ramifications, can you give us any idea of how that might affect a business owner?
Well, you never know what the court system may do if you've been challenged.
Yep.
So by keeping it separate, you don't have to deal with that. So I think that is, I can't say what they would do. I'm not an attorney. I've seen some things be challenged, but you're just better off making that clear divisional line right from the beginning of keeping your books.
Absolutely.
Totally understand that it is very important for them to keep their personal accounts separate from business accounts. And thankfully, a lot of financial institutions do offer business accounting services. So
Yes.
if a business did want to get started and open a business account, what type of legal documents would they need to bring with them? Bill, can you give us a sense of what they might need to prepare as they're looking into financial institutions?
Well, they probably should make sure that they have their EIN registered with the IRS. Again, if they're chosen to go to a sole proprietorship, they're DBA registered with the county, or if they've taken the next step for an LLC or subchapter, is to make sure they have their legal documents prepared. So it's very clear to the financial institution that it is in fact a true business, and it's been at least established as a separate entity. So again, those are the types of things that they minimally need to bring to the table.
Absolutely. Anything we didn't cover, Cynthia?
I would just say the articles of organization, just to like lay it out there, articles of organization,
Right.
Your operating agreement, your partnership agreement, if it's a DBA, your certificate, definitely your license, and then also the individual and the owners need to have their government IDs.
Right.
They usually take a passport or your driver's license, which most of the time you have, right? So and the other thing, not to forget, is that you have to give them money to start the account.
Yeah.
So I would say that's probably about it.
Yep.
Bill covered it pretty well.
Yeah. Thank you. So as they look into financial institutions and are doing their research, there are, obviously we covered the differences between credit unions and banks. There are other types of organizations out there that offer um, deposit and lending accounts like fintechs, things like that. What are some of the standard business products and services that every financial institution should have for a business, Cynthia?
I would say you need to have, obviously the checking account, the savings accounts, maybe remote deposit. If it's, if they have the need for international, they have to make sure that the bank has that. The ability to do, mobile, as well as, I think it's important to have a relationship with the bank. So the ability to do mobile as well as have, or credit union, the ability to do mobile as well as, have a physical presence. I really
Absolutely.
believe it's important to build a relationship.
Anything you'd like to add, Bill?
I think the key word there is relationship. Really looking to that's what you feel, that the institution is a partner and is willing to help you, whether it's offering research information on a particular industry you may be in, offering seminars for education and things of that nature, any affiliations that they may have to outreach into those areas as well. So again, being able to establish a rapport with the institution and your lending officer, or whatever the title may happen to be, and having the confidence that they have the knowledge of the industry you're getting into, and they're not just pushing paper. And that to me is a critical difference of in trying to sort out the different financial institutions, is who has that next level of information besides just the traditional banking services.
Absolutely. You said something that was really interesting there about having industry knowledge. Um, so, what are some of the ways that a business can tell whether or not their banker has that knowledge or their branch manager um, is confident in what they're saying? Like, what are some of the ways that they may be able to identify that?
My suggestion would be ask what their portfolio is, and that's a good indication of the types of companies, the diversification of the types of companies. Ask the lending officer or whoever their primary contact, what is your experience? If you don't ask, you're not going to find out, right? So just fundamental things like that. But again, but researching the bank's portfolio or financial institution portfolio, and seeing what areas they're engaged in, seeing what areas they're promoting to invest in. Those are some key indicators to be looking for when trying to select a financial institution.
Absolutely. Cynthia, anything you'd like to add there about the relationship with the banker?
I would say that a branch manager may not always have the base knowledge for the industry. When you get to the lender, you should be able to tell if they are, by asking questions, concerning your own business, and having that conversation, whether they have a knowledge of what, products may fit you better. So, it's kind of a, with building that relationship. Okay, well, if they don't have the complete knowledge of your industry, are they willing to take the time to
Right.
go and see, how your business is performing, what you're involved in, listen to you for what your, expectations or, goals are going forward in the future. If they're willing to take the time to do that, it's probably more important than even having the basic industry, knowledge. I would say there's probably only one industry that I saw, it seems to be, extremely specialized, and that would be like the medical field. There are lenders that really specialize just in that. But other than that, most lenders will make the effort,
Right.
to get up to speed.
Absolutely. That relationship is really important, and it's important for them to ask questions, to be curious about the business. And so I think that as business owners, have these conversations, they should feel, like it's a partnership.
Right.
Um, absolutely. Uh, so, we talked about or you talked about lenders a little bit here. Do businesses need credit? And if so, how do they build that? Cynthia, can you give us some insights on that?
Well, business credit is important. I think it gets, more important as the business, has proven itself and starts to grow. Dun and Bradstreet, it is good. Experian also has another element of that. So I would say, as you start to grow, you want to be more aware of where you are in that. And there is, from what I can see, there is some fee for that, for you to keep an eye on it with both of those.
Absolutely. Many financial institutions don't lend to businesses that are under a year or 2 years.
Right.
Right. Right.
Bill, what type of advice would you give to a business that's looking to acquire funding but isn't necessarily at a place where they could do it from a traditional financial institution?
Well, there are other institutions out there that do in fact cater to startups. So, you can, seek them out. You can probably expect to pay a little bit higher on the interest rate, to say the least. But there are institutions out there. There are other vehicles to generate funds, not necessarily recommended, but, savings, 401ks, last resort credit cards. But, again, you got to be very judicious about how deep you get into any one of those areas to generate your own self-funding credit. Obviously, family and relatives, again, another arena, but, I kind of caution about that of, taking family money, so to speak, unless it's been endowed to you or something like that.
Cynthia, anything you would like to add there?
I would say that if you're going to look at family money, that you go into a formal note. That is what I have told all of my, individuals that have chosen to take that route, because it gets rid of the he said, she said, what was the understanding? A formal note can't be misunderstood. So I would go into a legal document. There are SBA micro lenders that will do up to 50,000. And when I say they'll do up to 50,000, they do startup lending. That's what they were put into place for.
Right.
So sometimes if, the bank isn't ready, or the credit union is not ready or able to lend to you, that is a source that you can use to possibly get the startup financing that you need.
Right.
They're through the SBA has placed them, and we have one in our area. So, it's definitely a resource to use. And some people have used like the equity in their homes. But of course, that's to come forth with, the amount, the amount that they're comfortable with.
Right.
Absolutely. The credit union partners with Pursuit and we partner with Community Capital. Those are two resources that smaller business can look at to get some funding as well. Um, and we advocate for responsible lending. So the decisions that the small business owners need to make sense and need to be fiscally responsible because you don't want to get yourself into a bind, right?
Right.
Well, my overall caution is whatever you do, it's a risk, and can you afford to lose it? If you're using 401k funds or any other personal funds, can you really afford to lose it? It's usually starts to generate some thoughts with the client.
Yeah.
I really try to deter them from using
Yeah.
any retirement funds.
Oh, absolutely.
I'd rather they waited a while,
Mhm.
and saved some more capital.
Yep.
If that's what needs to happen. Retirement funds, I really do deter them.
Right.
Yeah. And that's why it's important to have, these partnerships with the SBDC, with scores, so that they can get this valuable mentoring and information so that if it's not the right time, they can figure that out. And one of the ways they can figure that out is by building a business plan. So, Cynthia, can you give us a little insight into why a business plan is important to secure funding?
Well, the business plan, whether you are an existing business that's looking to expand in some way, or a startup that is looking for, financing, like, you said, if it's under 2 years, possibly at Community Capital. Um, they're looking to see if and understand the business that you're getting into, or that you are understanding all of the expenses and the possible deterrence of the expansion that you're planning, right? So they have to be based on some kind of, factual information going forth that shows that you have the ability to carry this out, that you have the knowledge of where the competition's pricing is, that you are, aware of what kind of marketing you're going to have to do to try to push this, whatever it is you're trying to do forward. I mean, if you can't tell your story in the business plan to make someone understand that you truly understand your business, you're gonna have a problem. So that's why I really believe the business plan is so important, not just for acquiring lending, but for the business owner or the upcoming entrepreneur to understand what the difficulties may be going forward.
Absolutely. Bill, anything you'd like to add?
Yeah, clearly, I think one of the things I find a lot of clients, it's an eye-opening experience when we take them through the business plan process and to hit on all the areas that just mentioned in terms of knowing your competition, understanding your marketplace. And one of the things I always challenge them on is what is their experience in this business? And if they don't have any experience, who are they going to bring into the business that is going to, be a part of the business or to help them get started that has that knowledge? Because that's a key factor in my mind. That the idea sounds good, but they really may not fully comprehend what they're getting in for. And certainly the business plan process unearths that in many, many, many cases. And sometimes they refine their plans and, reduce their expectations, if you will. And sometimes they say, well, maybe this is not a good idea at all. And so that to me is still a success that, somebody didn't start a business, put a lot of money into it and lose it to find out it wasn't for them. So I think the business plan is critical. And again, for the life of the business, people unfortunately sometimes think that the business plan is just for startup. It's also should be used your vehicle to grow and to keep pushing it out. And I also suggest a kind of a 3-year horizon to keep extending your business plan to take that view out at least 3 years, perhaps 5. So
I hope I'm not speaking out of turn, but both the SBDC and SCORE have templates or resources that businesses could look for on their sites, correct?
absolutely, yes.
Yeah, both. We actually, and I didn't mention it before, we actually have a source called Skills that is a training, kind of an online training system that the clients can access, free of charge at their own convenience. And one side is a worksheet side that basically provides some, basic business knowledge. And the other side is the business plan side. And I think both, have helped some of my clients, become more aware of what they weren't thinking about.
Right.
And another resource we have is we have our research network that is capable of pulling like industry market analysis, so that, because there's a part of the business plan, you have to know what the rest of the industry is doing in the nation. And
Yep.
there's a part of the business plan that, that pertains to that. So we have that ability also to get them that information.
Absolutely. That's fantastic. It's incredible that we do have these partnerships and local partnerships within the community to help and support the businesses through financial education, financial literacy, and even just, market knowledge, things like that. Um, as a business continues on their journey and they're, um, thinking about the relationship, thinking about where to bank, is there any piece of advice that you would have for them in the first year that they should be looking for as they start the journey?
I think it comes back to being comfortable that they have a relationship than just not another loan number or account number or whatever. So that they do in fact have a relationship that the institution is willing to engage with them, kind of help them if they need to answer a question, things like that. That they feel that they are the institution is a participant and not just looking to collect a monthly loan payment. So I think that relationship it really is a key factor and establishing that comfort level between the client and the institution.
It's about affordability as well, right?
Oh, and absolutely. Yeah.
Taking a look and making sure to do the discovery and look at what fees you're being charged, what are your interest rates, things like that. Cynthia, can you?
Yeah, it is. It's, I mean, all that Bill said, the relationship is definitely top of the scale. But, I think that also plays into the institution being transparent.
Yep.
The lender, being able to let the borrower, know exactly how the mechanism that they're using functions,
Mhm.
whether you're using a term loan or a line of credit, or, you're going for a mortgage, are there prepayment fees? Are there late fees? How do they function, right? So I think all of that comes with that good basic relationship, is that when you have that with the lender and the institution. Of course, you need it on the branch side for all your, for all of the assistance, that you might need when something happens with an account, or, or you just don't understand how something's functioning, you need that on the branch side. But when it comes to the lending side, I do feel it's important for transparency and for the lender to divulge, and let the business know exactly how that lending tool works.
Right.
And that's important.
Absolutely. So we're coming up at the end of the session here. I just wanted to put a reminder that if you have any questions, please use the Q&A feature. You can also put them in the chat. We're happy to stay on for a couple minutes afterwards to answer some of those. So I will just close it out with one final question, and I'll start with you, Bill. Are there any experiences that you can share from one of your mentees in terms of helping them find a lender, helping them find a financial institution that's right for them?
Yeah, I had one client that we spent a lot of time together, and she was looking to essentially buy a business, which has its own, set of nuances, if you will. But again, she was involved in the business and was actually buying it from the prior owner. So that made it a little bit easier from getting all the historical information, financial information. So the prior owner was very transparent on that. And that enabled us to build a business plan with all the right information and, take it to, a financial institution, one of your partners. And she was able to get her loan with absolutely no ifs, ands, or buts about it. So it was a really great experience, but she, knew her business. She had a clear direction of what she was doing, good handle on her client base. And, like I said, the good news is there was a very cooperative seller, which helped the process.
Thank you. Cynthia, anything?
Yeah, I've had similar situations like Bill, and one in particular, where they too, were buying the business. And, whenever that is happening and, I mean, basically the lender is going to need 3 years financials from the existing business for that to be able to take place. They're, and that was provided, the information as far as the inventory, we went through all that, and things moved pretty quickly because she had gone and she had worked with her for like 6 months. And it's important, if you are going to purchase, a business, to have some kind of knowledge of how it's really operating.
Yeah, inside knowledge.
Yeah. And even if you're looking to start one,
Right.
that, I mean, I know I'm going a little off now, not talking about, what you asked, but if you're looking to start one, that business knowledge is something that the lending institutions is looking for. They're more apt to assist you when they know that you have worked in that industry.
Yeah, that's an excellent point, Cynthia. And something we encourage people to do is if they don't have direct existing experiences, take a job, even if it's part-time, in that industry to, gain the knowledge, but also potentially help them open their eyes as to, is it all that it's cracked up to be? Is it not all fun and games? And
No.
yeah, and see what the real opportunities are and see what the challenges are. And, that makes a big difference as well. Excellent point.
Absolutely. Yeah, I think if we can take anything from today, it really is that, as you're looking around, as you're starting your business, you want to make sure you're doing your due diligence, right? Doing your research,
Yep.
looking at the financial institution, what type of relationship it can offer you, making sure you separate those personal and business accounts so you don't get into any legal issues and you minimize your exposure to risk, excuse me.
Absolutely.
So we do have a couple questions that came in. The first one says, are there any resources such as workshops to write a business plan and create a mission/vision. The attendee says, I've been struggling with mine and have been in touch with the SBA, who are lovely, but I think that she thinks that she needs, or sorry, I'm not sure. They think that they need more in-depth training and learning.
Well, again, I think both of our organizations really offer one-on-one mentoring services to help any client develop that business plan. Again, you mentioned earlier, we both have templates and we both have processes that we follow that have been, proven throughout the year. So either one of our organizations would certainly be able to help in that arena.
Definitely.
Thank you. Then the next question we have says, the books. What banks or institutions help run the business of the business? So I think they may be talking about software or, like a connected software that can be connected to their financial institution.
Yeah, that you need to check with the financial institution that you're looking at going into, and whether you're using QuickBooks or what program, does it have that ability to to download into that, if that's what you're talking about. You need to check with them directly.
Right.
Yeah.
Yeah, if they have truly online services, connectivity, et cetera. Online banking.
Yeah, and sometimes even with that, there's still adjustments to be made. It's not, it's, in my experience, it has not been perfect. Ever.
Systems and
life.
technologies. Thank you so much. Well, I think that's all of the questions. I'll give it a couple of seconds here if anybody has any follow-up questions. Cynthia, Bill, I appreciate your time. I thank you so much for coming and sharing your insights today. Lots of valuable knowledge. So we appreciate it very much here at
Thank you.
Thank
Thank you for inviting us to participate.
Thank you for hosting this, Ashley. Really, it's appreciated.
Well,
And thank you, everybody. I can't see you, but thank you for attending.
Many thanks to everyone who joined today. If you're interested in other business articles, webinars, and resources, please be sure to check out our website, hvcu.org. We hope to see you at future events. We hope that everybody has a great day today. Thank you guys so much. We appreciate your time.
Be well.
Bye.
Thank you.
Thank you.